If you're a startup, for example, in France, and you hire an engineer in Belgium, you literally cannot offer the same stock option deal. There are different, elements, different things to consider. Different countries, different tax rules. In most of Europe, your employee gets taxed the day they exercise their option. So before even they see a single euro of real money. With the 28th regime, the Commission basically just published, there is a clause that would harmonize stock option taxation across all 27 member states. So I think it's a big difference. I think that's the big game changer that nobody is really talking about. And basically the idea is that you're taxed at sales, not at exercise. Huge element, a little bit sort of hidden in the narrative, especially in newspaper, but I thought we should just dive right in and go technical right to these elements. And let me ask you, what is your thinking about this?
Oh, that's a fair question. I've not been following all the fuzz around the EU Inc., but the idea has been around for quite some time. So the basic idea is in Europe we need to be competitive. We need to remain competitive, and one of the sources of competition is to remove friction, so to allow entrepreneurs and people to work on solving issues, not on going around red tape and bureaucracy. And one of the main things that as we all know in Europe is that there are 27 member states, and all of them has their own different legislation, in particular around corporate stuff, company formation, how capital works, how taxation works, as you were mentioning, how remuneration works for employees, and so on and so forth. So at least for the last, I think, 15 years, I remember the first instances, at least 15 years back, more or less, there has been a push from the bottom to have an harmonized European company, at least, that levels the playing field across Europe and makes Europe more understandable within Europe and from the outside. So you have the basic idea, the main idea would be to have one type of company, one main legislation around the company, one main way to approach taxation around the company products. That would be the sacred graal somehow. And in the last few months, things have been moving, and European Commission has taken on the proposal, the challenge, and they released this first draft of the new EU Inc. idea. Again, I'm not too deep into the details. I've been perceiving that there is some disappointment somehow from the main proposers, since ideally to make the real EU Inc., you would like to start from a clean slate and have all the 27 countries starting from the same point. My understanding is that this current proposal is not exactly in that direction. It still allows a lot of room to apply the guidelines for each country member, and that's probably still not what the main proposers wanted. But I think the things are still moving, and hopefully they will continue moving in the right direction.
Yeah, I mean, things
What do
are
you think,
moving.
Jack?
Yeah, I mean, let's learn from history. I mean, the Delaware sort of LCC structure back in the 90s is basically the model that became the trusted sort of benchmark and gold standard for company formation and raising capital. And of course, historically, before I didn't know that before Delaware, it was New Jersey, but then New Jersey got some tight regulation. And then Delaware sort of took the ball and became very much simpler to run companies and start companies as a state. So basically they were trying to attract companies. And then when the tech boom happened, then everyone was ready for Delaware and they wanted to incorporate in Delaware. So learning from that, I think that's important to see how simplification really has a major ripple effects, and it's not just it's totally undervalued, and that's the truth.
Yeah.
And as you say, everything is still moving. Europe is going to take a while. Delaware had more than 30 years to sort of consolidate their perspective in trust, in banking law, in litigation, corporate governance, and etc. So there are a ton of like from an investor's perspective, right? Thinking of a Delaware company is normal, is a no-brainer, right? So there's no hidden features there. EU Inc. is kind of modeled that way, but I agree with you. There is a ton of still like gray area, which is good for digitization of company, good for the €100 opening fee, 48 hours to company formation. I think now in Europe is spent between 3 months to 6 months, something like that. I don't remember. I don't know in Italy right now, but it takes quite a while.
Yeah, it does. It does. So I'm not sure these are the key issues that should be tackled. So I mean, good. Making simple to start a company and low cost. Nice. It's a very nice to have feature. So this is my opinion, but I mean, there are like millions and millions of companies in Europe. So companies have been opened. Right now, someone is opening a company. So I understand waiting a couple of weeks, but that's not the key feature of Delaware, in my opinion. Delaware has two key great features. A lot of well understood processes and governance that, as you mentioned, everybody knows everywhere in the world. So a very mature body of law around corporate formation, corporate governance. And next to it, a very strong and experienced law ecosystem. So the judges from the Delaware corporate section have a huge corpus, a huge experience about anything related to corporate matters. So all the issues are settled very quickly because the law is clear and there is a big experience there and everybody knows it. So certain of law and a corpus of shared knowledge, accepted knowledge. Those are the things that really make things quick and reliable.
I agree.
So we need to get there.
I agree.
So I absolutely welcome lower cost, lower friction, higher speed to open a company, but that's not the point, I think.
Yeah. The big element, the big play is about the stock option for sure. I mean, before this proposal, essentially, and I mean, it's very tough to swallow this pill. In Europe, essentially, you get taxed as you exercise your option. So let's say you have a €1 like option sort of value, and your company gets to 10. You wanna sort of exercise it. You get taxed. And there are two problems. So you get taxed, of course, on the delta, and you don't have the money. You have stocks. So basically, you have like an immediate like outflow of capital. Second, most of the time is taxed as income tax rate, not at capital gain. So that can span a lot, up to 40 to 50% across Europe. So a massive disincentive for founders to actually give incentives to team members. So imagine what it does in the dynamic of a team. So by changing that basically becomes everything more fluid. So basically you get taxed at capital gain rates when you actually sell. So it's basically how it should be really, and how I would say the benchmark is in other situations. So big change over here. Yeah.
Agreed.
One other element that I thought was the fact of having this digital register of all European company implemented in the future. So imagine how this would change sourcing from a venture capital perspective. There is a lot of signals that we see when we scout for companies, when we want to sort of approach people working on different fields. So that's great news for sort of making everything more cohesive, as basically we will have like a sort of, hopefully, a unified resource where all new company can be sort of shown, and as VC get better and better at using database through AI and whatnot, then it's a great way to add visibility and get reach out.
So basically a unified hunting ground.
Exactly.
Well, I mean, yeah. So when everybody has the same signal, it's not a signal anymore. So it depends. It's good. It's super welcome. But again, I'm not thinking about that as a main main point for wanting this type of regulation. The point is making it easier to scale, to remunerate, to manage, to resolve conflict. So those are very important things that in Europe are
Yeah.
really scattered. And every time you think about opening subsidiary in another country or in another European country, you have like headache. Oh my God, I need to learn again local legislation, blah blah blah. So I
So yeah,
follow you,
probably.
but again, those are not these are not the main point. I believe the main point is about make it easier to create big enterprises, so
So
successful
probably
enterprises.
the next step after this, as for example, let's say bankruptcy and transparency and governance rules are not yet unified. They're really up, as you were mentioning, to each state. So maybe that's probably the big step as we get closer to sort of a Delaware-ish sort of structure. So yeah, I agree. I mean, hope for the best but prepare for the worst. So basically that is the take, and I agree with you. That's where basically company like fall and stop and get blown out of the water. So definitely interesting for that angle. All right, let's go back to Italy maybe, shall we?
Yeah, let's go.
Yeah, so let's talk about UpSurgeOn, a medtech startup raising 5 million euro in a growth round from CDP Venture Capital, Seamest, Deep Blue Ventures, and Azimuth. So we don't see those kind of mix often. So this is a deep tech company essentially working on in the future of surgery, like surgical training, and how exactly the future generation of doctors are trained. Basically, they develop a full infrastructure which they're playing on this cadaver-free training model, which I thought it was interesting, which kind of changes the game changer for that industry. Is definitely a game changer that combines anything digital, so apps, VR, augmented reality, and a very accurate physical simulator, which basically they make like essentially like a full stack of a training model available to medical student. So very interesting product wise. In terms of traction, I think they work with more than 100 countries. So commercially, they pretty had some solid traction. And yeah, a nice fundraise, not a crazy fundraise. I think it was really well balanced. I think before they raised a couple of millions, but then they went on the sort of the solid and grounded route, and I thought it was interesting. Yeah.
No, I agree with you. So this is the biggest round in this week. So super welcome. Some kind of deeper technology. So very nice in this education space that's very niche, very specific. I wonder whether the pathway will evolve. Think about robotics and robotics in medicine. How this platform can evolve in becoming somehow integrated in a future robotic surgeon or something like that. So I'm always thinking about this type of professions, jobs, or actions more than jobs that are very where accuracy is very important, when you need to be very precise. Precision is important, timing is important. So I think about how they will evolve in the future with technology and robotics and so on and so forth. So
So
super
that's a
interesting.
perfect use case. I mean, this is a great sort of tool for sharpening the sort of the psycho, not only the psychic part but also the sort of the muscle memory part. And it's not obvious because not many professions need both at the sharpest. So this is a great use case for this kind of new wave of educational technology. Very, very interesting. Right, moving on. Let's talk about AI. Alomana, AI startup, raising 4 million in a seed round from CDP, Italia Venture Fund 2, Fondo Imprese Sud, Founders Factory, Kairos, Italian Angel for Growth, and Club degli Investitori. So Alomana has a very interesting value proposition, which actually kind of ties in everything that is happening in AI, which is basically the agentic layer, in particular the agentic layer for enterprises. So up to a few months ago, everybody was talking about copilots, but then of course AI moves at speed of light. So now the new angle, which I believe is probably where all the market is going to go, is the AI infrastructure layer that basically does workflows. So that's really where these guys are working on. Two Italian founders with a great experience and a great background, and basically they're trying to essentially change this copilot narrative and move it more toward sort of the executive agentic workflows, which are useful for companies. They list a bunch of use cases on different parts of enterprise, and that's pretty interesting as well. And yeah, that's a very sharp angle, I would say.
Yeah, absolutely aligned with the current timing. As you mentioned, agents are all the rage. This is the year of agents. And one of the areas when there will be a lot of pressure, competition, and tentative to become the reference point is about enterprise and agents in the enterprise. So perfect timing, perfect positioning. Nice to have such a startup starting from Italy. Well, with already an international exposure, so it's been invested by the CDP Fondo Sud, so South Fund in Italy, because they have a headquarter in Bari. So that means I think that's relevant. But they also have already presence in the US, at least, and somewhere else in Europe, I believe. So I think it's super good to have this international presence from the start because the problem is global.
Yeah, I mean, that's a great point. I think my feeling is also that, people working in AI agentic model, being at the cutting edge of technology, probably will have in the next years a better time involving international investors, because talent really is everywhere and really they can develop a lot from different geographical location. So maybe compared to another kind of digital company, which solve maybe one niche problem, I would say intuitively that international investor will be more sensitive to that kind of companies. So good news for people working in AI. I would argue that.
I agree.
So, Nick, one last comment before we close. So, checking on your tracker, basically compared to last year and the year before, I think we're a little bit behind in terms of fundraise. What is your take on this one? Because in the past 2 years we had a nice sort of alignment, but this year seems there is some slowdown. I mean, it's early to say again, but it's interesting to see these first signals.
Yeah, the year was starting, faster and better than last year. But going forward, we haven't had any major round. So Q1 is closing, a bit in a meh position. So we had the 100 million round raised by rent to cash. But I don't know how much of it was debt and how much of it was equity. So even though there was 100 million on the table, I believe most of it was debt. So again, good signal, but not enough to move the needle. Let's continue waiting for the later stage rounds. I think that a few will appear later on during the year. I hope so. But from the network, good news are emerging. So I'm quite positive that things are moving.
Awesome. All right, Nick, thank you so much for joining, and I'll see you next week.
Ciao, Jack. Take care. See you in a week. Ciao, everybody.